The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN, coming to you live from Los Angeles, California, where it's just a little past noon. Let's see, what time does that make it in Greece? We still haven't heard anything from Greece yet, but I think it's a little past 10 o'clock at night there in Greece. But stocks rallying today. Report in the Wall Street Journal online earlier today that private sector creditors representing more than 75% of outstanding Greek debt have agreed to exchange their holdings for new debt. Some are saying that participation rate is closer to 90%. So stocks rallying nicely on that news. Okay, number to use to talk to me today is 877-927-6648. A reminder that my show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern on TFNN. Show is also available as a podcast on iTunes, and don't forget you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. Don't forget about Tiger TV on the homepage of TFNN.com. You can watch it right from the homepage on your PC, or you can look at Tiger TV in your handheld device, your iPhone, your Android device. So be sure to check out Tiger TV. If you do and you're watching Tiger TV live when I'm doing the show, you can look at charts right along with me. So why don't we take a look at some index charts here. We got a little more than 50 minutes left to go in Thursday's session. I'm going to update my chart of the S&P 500 here, where I have the 10-day, 20-day, and 50-day moving average plotted for the bogey. Right now, it's pretty much near session highs, up close to 15 points, 1.1% to 1352. Higher volume decline on Tuesday when the index broke below its 20-day moving average. It seemed likely at that point that the 50-day moving average for the S&P 500 would come into play here at 1325. But what did stocks do? They rallied in light volume yesterday, and at last check, let me just check and see where we're at with volume right now. At last check, it was tracking a little bit higher than Wednesday's levels on the New York Stock Exchange and Nasdaq. Right now, Nasdaq looks to be about equal now with Wednesday's level. On Wednesday, 1.52 billion shares traded on the Nasdaq. So it looks like, unless we get a big rush of trading volume late in the session, which is always possible, Nasdaq volume tracking pretty close to Wednesday's below average levels, and on the New York Stock Exchange, pretty close to yesterday's level of about 795 million. So once again, a day, conviction behind the buying today. There certainly wasn't any conviction behind the buying yesterday. Not much conviction behind the volume today. Once again, volume on the Nasdaq and New York Stock Exchange tracking pretty close to Wednesday's below average levels. So that's a look at the S&P 500. Let's take a look at the Nasdaq here. Sure, we're going to see that up near session highs as well, up 37 points, call it 1.3% to 2973. It is trading back above its 10-day moving average. And so headed into today, listen, it's a very tricky market right now. Nice to see gains the past couple of days. It doesn't get rid of the fact that there has been growing signs of what I'll call mild distribution in this market. Headed into today, if you look at the New York Stock Exchange Composite Index, there have been 5 higher volume declines in that index since February 15th, thereabouts, 4 for the S&P 500 and 3 for the Nasdaq. Not quite enough to really cause problems for this rally, but the other thing you have to keep in mind is that when you look in your stock screens and you look at the big leaders over the past 2 to 3 months, there's virtually no damage out there at all, technical damage. No signs of heavy volume selling, no signs of institutional selling in a lot of the big market-leading growth stocks. So despite some mild distribution in the major averages since mid-February, something to pay attention to, but I think it's still too early to give up on this rally. Now, of course, we've got the jobs report that looms large tomorrow. Clearly, the market is expecting a good number. No secret there. We could see, job growth in the 200,000 area. I've seen estimates as high as 250,000. My colleague Jim Cramer over at The Street thinks it's going to take a number better than 250,000 to move this market higher. I tend to agree with him, although, let's take this what if. What if, we get a 275, 300,000 number tomorrow, and we start to see this job growth, really the rate of job growth picking up faster than much had anticipated over the next few months. It's always possible. Remember, the Fed is on record saying that interest rates are going to stay low through 2014. They're not expecting the employment picture to gain steam anytime soon, but there's always a possibility that could happen. So we'll just have to see. All eyes will be on the jobs report tomorrow, and wish I could say how the market is going to respond to it, but I really don't have any idea. I see some yellow flags in the major averages, but again, even though there's been some mild institutional selling, look like a pullback was going to start to take shape, but past 2 days shows us that is not the case. So do we sell the news tomorrow? It's possible. Do we move higher on a better than expected number? That's possible too. In terms of my model portfolio, my Ultimate Growth Stocks model portfolio, that's a newsletter I write at tfnn.com. If you want to get a 30-day free trial to Ultimate Growth Stocks, you can do that right on the home page of tfnn.com. Just click on the newsletters tab right on the top of the home page, and then click on investment newsletters, and you can check out my newsletter. I currently hold about 10 stocks in the model portfolio. I think it's a difficult environment right now to be aggressively committing new capital. What I'm seeing is, in terms of the universe of stocks that I follow, seeing a lot of extended stocks out there, a lot of stocks that I'd like to own, but I feel like I'm chasing them up here. So, as a growth investor, you always want to be careful not to chase stocks that have been running higher for several weeks, and there are a lot of extended stocks in the market, which I think makes a pretty good case for a pullback here. But we know that the market will do often what the crowd doesn't do. So if too many people are looking for a pullback, that generally means the market's going to keep moving higher. So I think overall the risk outweighs the reward here. I've got a lot of good movement in the model portfolio today. Several names up 3-4%, outperforming nicely, but a lot of them are moving higher in light volume. Okay, so going through screens looking for buying opportunities, not seeing a whole lot, and frankly, when I'm looking at some of these big growth stocks that are outperforming today, very few cases where I'm seeing volume expansion. So always wary buying a stock when it's moving higher in light volume as well. But again, keep in mind that there is really not much in the way of technical damage at all in my screen, so you have to pay attention to that. All right, check out crude oil today, up 0.4% to 106.58 a barrel. Let's check in on the XLE. This is an ETF that I wrote about earlier this week over at ETF Profits at the Street. I do daily ETF writing for a premium service. Again, ETF Profits over at the Street, but taking a look at XLE, this is the Energy Select Sector Spider Fund. It is up 1.1% today to 74.49, showing pretty compelling action here. Nice bounce off the 50-day moving average, but again, you see it come down in higher volume right here, and then it's coming back in light volume. So technical analysis 101, be wary of higher volume declines followed up by lower volume gains. That's what we're kind of seeing in the major averages this week, and seeing it in XLE as well. But so far making a case that it wants to find support at its 50-day moving average here. Top holdings of XLE, if you own this ETF, you're going to own large cap oil, names like ExxonMobil, Chevron, Schlumberger, ConocoPhillips. Interesting news from ExxonMobil today. Let's check in on XOM. They're talking about higher oil prices, probably a little higher than what they anticipated. That caused them to lower their production outlook over the next several years. Shares of ExxonMobil right now underperforming today, down 1% to 84.96, and as you can see, it is now trading below the 50-day moving average, which has been a support level in the past. It looks like ExxonMobil's ready to take a breather here. Going through my energy screens today, I did come across a recent new issue that actually I hadn't heard of before. Sometimes a stock will pop in there, but I want to take a look at BCEI. This is a small cap oil and gas producer called Bonanza Creek Energy, BCEI. Stock is down 11 cents today to 18.71, but has definitely been a strong price performer in the market since coming public in December at 17 bucks a share. The growth prospects here are very, very strong. The company's primary assets are in the greater Wattenberg Field in Colorado and the Cotton Valley Formation in southern Arkansas. This year, in 2012, Bonanza Creek is expected to earn 63 cents a share. That would be up 75%, annual earnings growth of 75% compared to 2011. In 2013, they're expected to earn $1.67 versus 63. That's up 165%. So this company is discovering a lot of oil in Colorado and Arkansas. New issue, oil and gas producer. I've been talking about this subgroup in the energy space for a while. A lot of fast-growing companies. Names like Continental Resources, which I recently sold for my Ultimate Growth Stocks model portfolio. Took a nice gain in that. Might have been a bit early, but let's see. While we're at it, let's just take a look at CLR, see what it's doing today. But there's another fast-growing oil and gas producer here. Stock is up 0.7% today to 89.48. But I recently took profits, like I said, in Continental Resources. But Bonanza Creek Energy, BCEI, on the Nasdaq is another interesting name in the space that I hadn't really heard of until today. So I'm going to be watching that name and see if it can form a base, and could be an early stage move here for BCEI. All right, checking in on gold. Gold up $14.80, close to 1%, about 0.9% to $1,698.70 an ounce. Let's check in on Randgold Resources. See how that's doing today. It's been rallying with the broad market for the past couple of days. Shares outperforming nicely today, up 3% to 112.54. Fell below its 50-day moving average earlier this week on Tuesday, but did manage to finish up near its high for the day. So there were buyers around during Tuesday's gap down, but again, gains for the stock on Wednesday and Thursday. So shares of Randgold Resources outperforming today, again up 3% to 112.54. Not a name I'm interested in right now. I don't buy gold very often from my Ultimate Growth Stocks model portfolio, but out of all the gold producers, Randgold Resources is arguably the highest quality name in the space. All right, folks, as usual, thanks very much for tuning in. Segment number 1 of Breakout Investing is done. We'll be coming back in 4 minutes, so stick with me. We'll be right back.
TFNN, what people are saying about Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and more responsive to market trends to shares to boost your portfolio performance right now while seeking to reduce your overall risk. At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at DirectionFunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Master of Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real. In the money game proves lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game, risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful trader to give you this unique newsletter. We're on the verge of the next great tech technology insider. He'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right. For a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Ken Shreve with you. Thanks very much for tuning in. Again, the number to use if you want to give me a call is 877-927-6648. That is toll-free. Not much in the way of economic data today. We did have weekly jobless claims earlier today. They rose 8,000 to 362,000. That was a little bigger jump than economists have been looking for, but still nothing really alarming in the data. The 4-week moving average of claims was mostly unchanged at 355,000. That's still near a 4-year low. So again, that data come ahead of tomorrow's February employment report, and I think a lot of people are expecting another strong number. Question is, how strong will it be? And even more important than that, how is the market going to react to it? Very busy week of economic data next week. We've got retail sales for February on Tuesday. We've got another FOMC rate decision or a Fed meeting concluding on Tuesday. We've got the Philly Fed that comes later in the week on Thursday, another reading on manufacturing, and then we've got producer price index, consumer price index data for February. That comes later in the week as well. All right, let's take a look at some earnings reports today. Let's check in on shares of The Buckle, BKE. Like this stock a lot. I got to tell you, there's a lot of good stories going on in retail, but I do like Buckle's relative price strength. I like its balance sheet. I like its growth in recent quarters. Shares of Buckle up 1.4% today to 48.56. $1.56. The teen retailer reported pretty good numbers, earnings up 12% from a year ago to $1.18 a share. I think that was 4 cents or so above the consensus estimate. Sales up 11% to $337.1 million. Nice same-store sales growth at the Buckle, rose 8% in the quarter from a year ago. Online sales were up 31% to $27.6 million. So that is the daily chart for Buckle. You can see a big gap up for the stock last week. Let's check in on a weekly chart for Buckle, and I think I have it here. Yeah, here it is. Let's go ahead and grab that so you can see it in Tiger TV. And this is interesting because, the stock has been showing price strength, but Buckle still could be in the early shares of a move here. This is a strategy that I follow for ultimate growth stocks. When I see a weekly chart like this and a stock breaking out from a long consolidation in pretty decent volume, this is compelling. I don't own this stock, but it does have a lot of characteristics that I like to see. Again, high return on equity, consistent grower, just a consistent track record of execution. Its high back in May last year was pretty much $48 a share right here, and stock at $48.53. I don't think the train has fully left the station yet. So in this case, you're really not looking at a stock that is uber extended or that has moved too far too fast. It looks like it's in the early stage of a potential move here. So Buckle, worth a closer look here. Also in retail, let's take a look at Williams-Sonoma. The news wasn't as good. I mean, the numbers were pretty decent, but investors are punishing the stock today. Shares of Williams-Sonoma down close to 5% today to $35.98. Not an attractive chart at all here. Big volume in the stock today. Looks like unequivocal institutional selling, and a lot of people are thinking that Williams-Sonoma might be on sale here. I generally do not like buying a stock when I see a volume expansion like this to the downside. So Williams-Sonoma, the earnings were up 8%, sales up 6% to $1.27 billion. Investors not happy with the numbers, judging by the stock's price performance today. Let's take a look at Anheuser-Busch InBev. Not a stock really on my radar, but excellent performance for Bud today. Big gap up. Stock is up 4% to $69.55 on a good earnings report. The company cited strong global growth of its Budweiser and Stella Artois brands. Now, we're talking about extended stocks. Where is your entry point on Bud here? It's not, in my opinion, buyable up here. It has been running higher for a while, and it's just an example of an extended stock. So I would take a pass on this one, despite the gap up, despite good volume. Despite the fact that the stock has shown recent signs of accumulation. You don't want to chase a stock. You don't want to buy a stock too late. Bud has moved too much already for me to be interested in it. Has just moved a lot already. So that is Bud. When we come back, there's a lot of interesting stocks out there. Again, I mentioned my growth screens aren't giving me a whole lot in terms of buying opportunities, but we're going to talk about a new issue that is forming a bullish cup with handle pattern when we get back. So we'll check in on that, as well as several other gainers today. We'll do that coming up. You're listening to Breakout Investing on TFNN. We'll be right back.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Hi, This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stock placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2 week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you. Thanks very much for tuning in. I want to go to Dominic in Arlington, Texas, wants to talk a home builder, and Dominic knows me pretty well. He knew I was probably going to talk about LinkedIn at some point today. Dominic, thanks for hanging on. I hope you hadn't. I think I missed you there when the producer put you on the screen there. So appreciate your patience. How are you today?
I'm doing good, Ken. I woke up. And no, in all seriousness, Ken, what are your thoughts on the home builders? Not only Pulte, but the main one in there, DHI, and DR Horton, and some of the other ones.
Well, listen, I own a home builder in my Ultimate Growth Stocks model portfolio. Looks like it's a very, very similar chart to Pulte Group. I think with Pulte and DHI, you've got two. It's a big group. I mean, you've got companies that are executing better than others in the group. DHI is my favorite name. Pulte Group is right up there. Good technicals. So I'm pretty keen on the home builders here. I like the recent accumulation that's been going on in the group, and putting up a chart of PHM for those watching in Tiger TV. Pulte is outperforming nicely today, up 5% to $8.94, and let's check in on DHI as well. That stock is up close to 5% as well. So, yeah, I have exposure to the home building sector in my model portfolio, and I hope that the stock continues to work, and we see continued price strength. I think the home builders are going to surprise in 2012.
I'm in agreement with you there, Ken. From previous, all of the charts look very similar. Are you do you believe the home builders are pricing in some sort of government move down the road? Because it really appears that way with all the negativity around the building group.
Well, that could be, but then again, names like PHM and DHI, not all these earnings reports have been the same. There are some companies like DHI, for example, they're based in Dallas, Texas, and they're not talking about demand issues. They in their latest quarter, DHI, for example, posted 15% year-over-year revenue growth, and it's expected to be that way in that 15% area for the next couple of quarters. So, for the higher quality names in the group, I think it's just, they're just seeing renewed demand, and, they're just acting well, no question.
Thanks for your insight there. Talk about LinkedIn. It looks very bullish. I know it doesn't have the earnings area very strong.
Well, I think it does. I think that LinkedIn is pretty solid. It's a recent new issue that not only shows good top-line growth in recent quarters, but they turned an annual profit back in 2010. They were profitable in 2011, and then earnings growth this year and next year. You're looking at 70% year-over-year earnings growth. So LinkedIn, I think, is the real deal. I've heard a lot of bullish talk about this stock today. Good volume in the stock. Nice day of accumulation. LinkedIn right now is up close to 6% to $90.32, and what you have here is actually a nice little cup with handle pattern forming. That cup with handle pattern that coined by Bill O'Neill over at IBD, and you've got a swing point of 96.31. Again, nice day of accumulation today, so would not be surprised to see higher prices, and hopefully again tomorrow we'll get buyers coming back into this market, and we'll see. That could fuel an ultimate breakout for LNKD.
I got you. Well, thanks, Ken. One thing with LinkedIn, I see the EPS rank is low. I know the projected earnings are really super, but what would cause the EPS rank to be in such a lower than expected range for?
Yeah, well, that's a good question. I'll put on my IBD hat because I used to work for that company for 12 years, and a lot of IPOs even showing decent earnings growth in recent quarters. Sometimes the EPS rank gets weighed down when a company does not have a long-term earnings growth rate. So if you look at a 5-year annual growth rate for LinkedIn, it is NA at IBD. So they don't have enough data to calculate it over that time, and that perhaps weighs unfairly on the EPS rating. So the fact with LinkedIn, the last quarter they did earnings of 12 cents a share versus 5 cents. That was up 140%. So now the quarter before that they did 6 cents versus 6 cents. So that was flat growth. That's also probably weighing on the EPS rating as well. But Overall, technical picture looks pretty darn good here, and top-line growth also solid as well. So I'm a fan of LinkedIn, unabashedly.
I am also. Hey, thanks, Ken, for your insight. You have a very good one.
Okay, nice to talk to you again, Dominic.
Bye-bye.
All right, Dominic from Arlington, Texas, loyal caller to Breakout Investing, and anytime Dominic brings up a stock you want to, we tend to follow very, very similar stocks, but he's a seasoned growth investor as well. So home builders, I like here. Again, I own a high-quality home builder in the model portfolio, and LinkedIn also acting well today. Good, strong volume in LinkedIn today, well above average, and stock is outperforming nicely. Let's check in on Starbucks here, SBUX. Starbucks has a conference call scheduled for 5 o'clock Eastern today. Stock is rallying sharply ahead of this conference call, up about a little over 2% to $50.54 a share. Company is announcing a new initiative in the premium single cup category. Again, that's going to be at 5 p.m. Eastern, so obviously some optimism about what Starbucks is going to say In that vein, when you think single cup coffee, of course, you think Green Mountain Coffee Roasters. That stock has not a leader anymore. Let's just say that it is trading lower today, perhaps on the Starbucks news, down 1.7% to 62.65. Green Mountain does not have the look of a leader anymore. Let's check in on shares of Lululemon ahead of its earnings report. March 22nd, before the open, is when this company is going to be coming out with earnings. Lulu doing pretty well. Recovered nicely yesterday and today after 3 straight declines. There weren't not much volume. Came into this stock when it declined in price. Let's see, when was it? It was Thursday, Wednesday, so it fell Friday, Monday, and Tuesday. Gave up quite a bit of ground, not much in the way of volume here, but Lululemon outperforming nicely today, up 3.5% to 71.04. Again, earnings March 22nd before the open, so upcoming earnings expected to rise 53% from a year ago to 49 cents a share. Sales up 48% to $362.2 million. So good chance we'll see a strong quarter from Lululemon when it reports later this month. Interesting, you're just not, Lulu has shown excellent relative price strength since it gapped up on January 10th. Okay, here was the gap up right here, and then it just started moving higher, but there's absolutely no volume at all behind its recent price increase. So that is interesting to note. Seeing a lot of that. I mean, a lot of people complaining about volume in the broad market, a lot of people complaining about volume, lack of volume in individual stocks, yet a lot of these names just keep trudging higher, and the market keeps trudging higher as well. Let's check in on shares of Coach today, ticker COH. Another interesting name, enjoying a strong bullish day of accumulation today. Shares of Coach up 4.8% to 76.88. The story here is that CEO Lou Frankfurt said the company is having a very strong quarter and business is trending extremely well. You look at a weekly chart of Coach and you see 8 straight weekly price gains. So to me, this stock looks a little bit extended after a big price run. You had a nice breakout from a base back in January. Here was a gap up, and here was the base that started right here, moved sideways, and then it breaks out. So good buy there, right around that $66 price level, but at $76, $77 a share, probably a little bit extended here as well. After the close today, let's check in on Ulta Beauty. This has been just another monster performer in retail. Shares of Ulta up 1.2% today to $88.97, ahead of earnings after the close. Another stock that is very extended. When I talk about extended stocks, and you see these stocks just acting so well, and even a name like Ulta has been under accumulation. I mean, it hasn't been rising in light volume. It's actually, there's been a little juice behind the move in recent weeks, but that doesn't it's still an extended stock. So very risky buying this name ahead of earnings, even though you're probably going to see a really strong quarter. The beauty retailer is expected to earn 68 cents a share. That's going to be up 39% from a year ago. Sales up 22% to $579 million. You hear the term of a stock picker's market. That's certainly the case in retail. You've got a lot of fast-growing retailers out there, like a Lululemon, like an Ulta Beauty. Got fast-growing restaurant names in the retail sector like Chipotle and Panera and Buffalo Wild Wings, but you really have to hone in on the companies that are, the most consistent performers, the ones that are being bought by the institutions out there, the ones that are really delivering the consistent growth quarter after quarter. I would definitely include Ulta in that group. So. Let's check in on LinkedIn. I know Dominic just called about LinkedIn, but let's just go over the base that is forming here. I mentioned the cup with handle pattern that LinkedIn is forming. Here was the start of the base over here back in October, November. Pretty stiff correction, but you see it came down, started forming the right side of a base. Nice day of accumulation here in February when it gapped up in price. And now LinkedIn is forming basically the handle area in a cup with handle pattern. Handle area is where last remaining sellers get shaken out of a stock. Maybe people that profited as the stock rallied from late last year into February, but you have a little profit taking here, and now a nice day of accumulation. Stock again up 5.7% today to $90.18. Good expanding volume today, under accumulation. You can't rule out an upside breakout in LinkedIn, and who knows? We get a nice rally for the market tomorrow. That could be the fuel that is needed here. LinkedIn, a recent new issue. Still watching a lot of new issues in this market. LinkedIn came public last year in May at $45 a share, closed at about 94 in its first day of trading. Let's also check in on InventSense, INVN. This is another interesting IPO. InventSense came down to its 50-day moving average recently, bounced off. I think there was an offering of shares here that was oversubscribed, so demand was very strong for yesterday. Nice bounce off the 50-day moving average. Good follow-through today for InventSense, up another 4% or so to 1731. So this is another interesting stock here. Recent new issue. You know, when it comes to growth stocks, if you can get them in the early stages of a move, that's all the better. Nothing worse, I should say, than buying a growth stock after it's already made a several percentage point move, up 100, 200, 300%. You know, you want to get them in the early stages of a move. So you look at companies that have come public over the past year, 2, 3 years or so. InventSense certainly has a lot of positive qualities, good growth. Their motion processing technologies are found in the Nintendo Wii. So definitely a company that is benefiting from, new conditions in an industry group. Their technology is well positioned for growth. Let's check in on shares of Tango, TNGO. This is another new issue that wasn't really that familiar with coming into today, but stock is outperforming nicely today, up 3.9% to 1884. Good supporting action at its 20-day moving average. You can see that right here. Like the stock's relative price strength, also like the company's growth as well. Better than 50% year-over-year quarterly sales growth over the past 3 quarters. When the company reported fourth quarter earnings, they earned 8 cents a share versus 4 cents. That's a 100% increase. Sales were up 57% to $29.2 million. So you did $29.2 million in revenues in the fourth quarter. It's not a large stock by any means. It is a small cap, has a market cap of about $615 million or so, but excellent growth prospects here. Tango makes software that basically helps companies better manage their voice, data, and wireless costs. They refer to it as life cycle management software. But this is another interesting IPO that has my attention here. Could see higher prices as well. Now, in the IPO space, other IPOs not acting that well. To check in on shares of Groupon today, underperforming broadly, down 2.4% to 1690. This stock really looks like it's in trouble here. Whether it's concerns about growth prospects, concerns about business going forward. They lost a penny a share when they reported fourth quarter results. Nice top line growth, close to 200% year-over-year growth, but stock is really still being sold by big investors here. So shares of Groupon not looking that good. But overall, a lot of interesting new issues here. Folks, coming up on the final segment of Breakout Investing, we'll be back in about 4 minutes.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. As we head into the final segment of the show, let's head over to Chicago and talk to Robert, who wants to talk about a pretty solid healthcare name here, Cerner, C-E-R-N, on the Nasdaq. How are you today, Robert?
Very good, Ken. Thank you.
So, do you own Cerner? You're looking at Cerner?
Yeah, I'm long Cerner around 71.50, and I was wondering what your perspective is on Cerner.
Yeah, I'm waiting for a little shakeout here. I mean, it had that big gap up on earnings at its last earnings report back in early February, and then it's just kind of it's moved ever higher since then. So technically, it's really strong. I don't think there's any no need to sell it at this point. It's 20-day moving average right around 73. If it breaks below that, there's any sort of volume, you may want to, to trim a little bit. But what you could happen here is is just get a little shakeout before another meaningful breakout. I like the company a lot. Technically, it's strong and holding above support right now. So really not seeing much in the way of sell signals at this point.
Do you have an upside target?
Well, for Cerner, I mean, when it gapped up on February 8th, it eventually took out its 52-week high of $74 that was set last year in late September. So, on a breakout like this, in a growth name like this, a company with strong fundamentals and good growth prospects, I think that it would be reasonable. You could add maybe 15 or 20% to that 74. So you'd be looking maybe 85 bucks, close to 90 over the next 12 months or so.
Great. Thank you, Ken.
Okay. Thank you, Robert.
Bye now.
Cerner, software firm, high-quality company, no question about it. Just consistent earnings, and has really just been a monster performer. Again, a stock that I'd be hesitant to take a new position here at $76 a share. You're probably going to get a little pullback, maybe a low-volume pullback to the 20-day moving average at 73. If it finds support, that might be a reasonable entry point, but definitely a solid performer here. All right, let's check in on the Nasdaq as we head into the close here. Couple of higher volume declines in the Nasdaq recently have my eye here. The index is still holding near its session high, up 1.2% to 2970. But on February 29th, on this day right here, the Nasdaq declined on volume of 2.1 billion shares. Then earlier this week on Tuesday, you had another higher volume decline where it fell, and volume came in at 1.8 billion. Now with the Nasdaq, what you have, and I know Tom was talking about this with the S&P 500. It's really a similar situation with the Nasdaq. It rallied yesterday in soft volume, 1.5 billion. Again today, volume tracking very close to Wednesday, 1.5 billion shares. Probably going to come in pretty close to that. So, recent distribution in the Nasdaq. There hasn't been a lot of it, but you did have 2 days since February 29th that are worth paying attention to. So, that said, Nasdaq still up near its session high today. And the S&P 500, let's check in on that as we head into the close here. That is also holding on to gains nicely today, up 1% to 1366 thereabouts. Folks, did not mention the Tiger Dollar promotion going on right now that give you an instant bonus of 20 to 30% on your money that can be used on all your purchases at tfnn.com. You purchase any amount of Tiger Dollars between now and March 11th, you get free admission to Tom O'Brien's all-day online Master Trader class. That's going to happen during market hours Thursday, March 29th from 9:30 a.m. to 4 p.m. Eastern Time. That's it for Breakout Investing today. Coming up next, the Tom O'Brien Show, 4 to 6 p.m. Eastern. Have a great afternoon, everyone. I'll see you back here on Tuesday, 3 p.m. Eastern, for another edition of Breakout Investing.